Just looking at Esor, Franki, they came out with results and very disappointing. We had headline earnings per share for the first half down 90%. That's to 4 cents, off around about 41 cents in H1 of 09. This is not a good result. Can you talk us through the detail?
Yes, they came out with a trading update a few weeks ago indicating that results would be off quite sharply. I think what caused the market some real concern is that their core geotechnical side, the thing that Esor Franki is really known for, basically fell off a cliff. The underlying demand in this country with a poor commercial sector, and of course the operations in Africa literally just didn't go anywhere. Incidentally as well, their pipeline division, which they acquired last year, and their civil engineering division, which they also acquired last year, margins came off very sharply, and I think the market has a great deal of issue regarding these acquisitions. They bought at the peak of the marketplace. No one quite knows where the margins will end, and the underlying performance of the pipeline division was actually pretty appalling.
And you've been very critical in your verbiage around the pipeline division. Is there a remedy to be taken here, or do you think they should perhaps even exit this business?
I think longer term, there has to be enormous investment in water reticulation in this country. It's the next big spending pattern after electricity. Shearwater Pipelines is one of the country's leading suppliers of specialized pipelines and valves into that sector. I think what happened is a number of very large contracts were curtailed. The government just physically doesn't have money to invest in this sector, and all the investment that's needed in water is being put on the back foot as they try and get Medupi and Kusile up and running. So at some point water will do quite well, but currently it isn't, and as such Shearwater inside Esor is doing particularly badly. I think in the longer run it'll do fine. In the short term there's more pain to come.
A revised trading statement out of Metmar benefiting from the rally that we've seen in commodities. I see headline earnings per share now for the 6 months to the end of August expected to be between 39 and 42% higher. Your thoughts around Metmar?
Yeah, Metmar is a very specialist counter. Not many people actually look at the stock. It's basically involved in metals trading and commodity trading. It also has interests in a number of mines, in manganese, iron ore, and particularly in chromite. So it actually has the ability to source from its own mines and then on-sell that raw material into global marketplaces. It's quite small on a global scale, but domestically it does quite well. I think the operations run out of Bryanston is a very sophisticated, very slick operation. And I think going forward, you might see some very interesting deals coming out of a company as they consolidate their assets, particularly in Zimbabwe, and potentially list them on local or foreign markets. So I think going forward, the bounce back in the metals market is good for Metmar, but longer term, the real news will come from them listing underlying owned operational assets. So Metmar is a story I've been following for quite some time, and one worth having a look at.
Consolidated Infrastructure Group, formerly known as Buildworks, coming out with very impressive results. That's for the full year to the end of August. Again, what do you make of valuations at this current level?
Well, the price as of yesterday was about 62 cents. They earned just over 10 cents on the HEPS level. So on a historic level, they're trading on just under a 6. They're sitting on about 230 million rand of cash. They're quite profitable. Electricity infrastructure in this country and in Africa makes up over 80% of profits. The building materials side is diminishing in size as the power side really gears up. They're winning Eskom work for the first time, and as the commodity cycle in Africa begins to regenerate following a slump in global demand, the companies in the DRC, in Angola, in Ghana want private power equipment supplies, and CIG, as it's now called, rather than Buildworks, is filling that void. So I think going forward, again, it's a counter I've been following for a number of years. At 62 cents, it's got great long-term value, and it's the only JSE listed play purely in power infrastructure.
And then a good news story on the positive rand. There are not many of those out there. This one is New World, that company reporting headline earnings per share for the full year to the end of August up 126% and benefiting also from a restructuring.
Yes, the company went through a bit of a dip a year or two ago. It has a very large domestic manufacturing base to make small appliances into the local marketplace. That was great when the rand was weak, and as such domestic manufacturing could compete effectively against imports. With a rand now below 7 to the dollar, it's much cheaper to import your toasters, kettles and irons from China and the East. And as such, New World's domestic manufacturing got absolutely murdered. The Goldberg family who own the company have restructured quite nicely. They've culled a number of domestic manufacturing plants. They now source most of their product from China, with a few key items still being made locally. So I think all in all, the benefits of restructuring, a very strong balance sheet, a progressive dividend policy, and acres of cash means that New World going forward, if the rand does start to weaken or if the economy continues to recover and consumers start buying more small appliances, again, is well poised for growth going forward.
Anthony, thank you very much for your time. Enjoy the rest of your birthday. Anthony Clark from Vunani Securities. In studio, Etienne Nel, BJM Private Client Services. We need to talk about Mr. Price today, saying that headline earnings per share for the half would be up between 45 and 55%. Not a bad result from a retailer.
Absolutely not. And market liking a lot, that share price spiking over 6% on that news. So, that shows you what a good retail business should be doing in this sort of market. We've had one or two retailers missing a bit on the revenue as well as on the EPS line, and their share prices felt that pain. So Mr. Price is definitely in our universe of retail stocks to look at.
Another retailer that has felt some pain today is Massmart, after the announcement that Walmart is now looking to revise its bid for 50% of the company at 148 Rand a share. The stock down 0.5% today, closing at 140 Rand 80.
Bronwyn, it's quite an interesting turn of events this. At one stage, the share price was trading 138 Rand a share. So the market being taken quite a bit by surprise by this announcement. So not quite sure what the Walmart guys are thinking and the reasoning behind that. It wasn't too much colour in the announcement. So I think only time will tell. But at 152 Rand, this was a great trade to get out of.
A great trade to get out of.
Yes.
I'm glad you added that. But we are going to be talking to Aberdeen Asset Management in the near future. They hold 12.4% of Massmart. When we initially spoke to them about the deal, they did say that they would be loath to give up what they consider to be the best emerging market retailer at 148 Rand a share. Anyway, looking now also at RMH coming out with a renewed cautionary.
Yes. Bronwyn, basically what Raymond Bank Holdings is doing is they're restructuring their balance sheet extensively. In essence, they've got some very key assets, the likes of OUTsurance, which you cannot get through a alternate listing. They've got a chunky stake in Discovery. They've indicated that they will continue holding the enlarged Momentum MetLife stake. They also have a big stake in FirstRand. And it's effectively becoming an investment holding company of sorts. So I think what's going to happen here is you're looking to streamline your assets. I would not be surprised to see the founding fathers effectively streamlining their portfolios. And in a way, this is a mechanism for them to exit some of their investment without having to sell RMH shares. If you think about it carefully, unbundling the stake of, let's say, your Discoveries or whatever the case may be, the GT Ferreras and the Laurie Dippenaars of this world can actually realize chunky amounts of capital without having to sell.
And as you
RMHs.
say, streamline their portfolios.
Correct.
MTN saying that its third quarter subscriber numbers increased by 4% to 134 million. Just looking at MTN's share price, they're not really reacting to that data flow at 123 Rand 98. Not exciting you, is it?
Not really. MTN is the growth telecom story in Africa. In fact, make that the world. Always the whole corporate action story in the back of our minds.
You're obviously well exposed to MTN. You just get the disclosure, yeah. I see. So that's why we're talking up the story here.
We can't buy any more of this one. Look, we've got the top management team in the telecom sector. Really like the management, the dividend policy that's now been clear. And I think let's just wait for the takeover to happen by some behemoth.